Hello and welcome again. Today we will talk about ArcBest Corporation, traded at Nasdaq, ticker name ARCB. Well, ARCB is a very interesting stock because it's now in correction. It's confirmed, but there are some bounces that might take place and we can play on those. And just to show you why is it correction first before we start doing more precise analysis, you can see we had a grow all the way from April previous year, and we grow really nicely from the level of about below 20 and did all the way to 90 plus. Of course, now the correction is taking place and we are in the situation where you can see, now we can remove this line, so where you can see that the moving average 20 is strongly going down. We had magic cross down today where the moving average 20 hit from top moving average 50, but this is delayed magic cross, meaning that the price already went down, so it creates momentarily very bullish situation. And because this is the major correction that is happening, what might be happening here, the moving average 20, as always it happens at the corrections, will work simultaneously as a support and as a resist and as an attractor. What does it mean? It means that the price is very low, much lower than moving average 20. On the corrective patterns, it works as an attractor, so it will attract price upwards. And once the price is already close to moving average 20, it will work as a resist, so it will push price down. So you have like a bouncing from the bottom. And if you would imagine that moving average 20 to go something like this, that would be your guideline, because you will have bouncing like this until we have a major breakout and recovery. And that's the way to trade on corrections, actually. And why is it the momentum? As I said, it's delayed magic cross down. Also, RSI wise, we're quite low in oversold area. MACD is just beautifully perfect. It's a second wave on the bottom, so it should start bottoming up. The volume traded is incredible already, so people really loaded a lot, which is also reflected by RSI slowly going down. So there are many people just new entries still waiting for profit, meaning that the further decline is not expected at all at the moment, but later it will, because once we have rebounds it will go lower. So how to play on this expected and upcoming rebounds? We can already buy within this volatility level, actually. Now we can magnify a little bit that you can see here, and it will be all the way between 58.42 as the lower level, and then the higher level it will be actually 60.95. So let's write it down as a call out for ourselves. So it will be 58.42 and 60.95. So this is really nice first level to buy, the primary level, and from there we expect to rebound towards this imaginary resist level. Maybe it will be sharper. It will be actually determined by moving average 20 itself. So therefore let's make it green, meaning that it is actually moving average 20 that will define this level. And once you're in the vicinity, it's just sell and will be around here, so about 65 plus, meaning that we will be able to make 10 to 15% profit immediately on these rebounds, and that will be our profit taking note. So let's write it here, 10 to 15% from the money allocated in the position. That's the profit taking note here. And indeed, don't hesitate to take it in time, because once the further decline takes place and you are not in time, you will have to face actually losing money, because then you will need to be prepared to buy even lower at the next wave. And if you don't have money to place, so then you will lose. And so this is the first level. And then again, what might be happening, it might go down and then go again lower, or still it might be a fake call, a little bit lower to decline, and then be attracted to moving average 20. It is still possible. And of course, if this is going to happen, then the levels of attraction would be here, with the bottom on the price action took place by end of January, and on the top being here, and also entrapping moving average 200. So this level, the secondary level, is working as a very strong double support, and being between 53.19 at the top and actually at the bottom being 50.50. Very interesting level actually. It will be very strong double support. So let's write our call out here, 50 and 53.19. So with this being said, this is the secondary level, secondary technical level from where we can rebound and again be attracted towards moving average 20, this imaginary line, green one, and then in the vicinity of it, it's expected to sell with 10 to 15% profit. And of course, for the third level, what we need to do, we need to take into account possible negative catalysts which might be there, could be news related to the company, news related to global market or to the sector. And if this is going to happen, we just need to keep some funds to buy at the very principal levels here, which are, of course, clearly these levels price action formed by December being between 21 and 45.83. Quite broad though, but still we need to be prepared to buy there as well if the price declines. And this will be the risk mitigating levels. It's not that it's expected, but we just want to keep some funds to buy there if needed. Because if this scenario is taking place, we don't do stop loss, we just buy more. While others will be exiting with losses, we will be just able to buy more cheaper stocks and then on the rebounds easily make 10 to 15% from the money allocated in this position. So this is the way we trade and mitigate risks. Actually, if you like this way of trading where we don't speak about 15-minute candles, we just look at the very principal levels, do non-linear averaging down without stop loss. It means that we don't buy our time by stop loss, because we trade on daily candles and principal levels, so we are okay to spend a little bit more time but then still exit with a profit, and we don't need to stick at the PC all the time. So if you like this way of trading, more relaxed, but doesn't mean that it's less professional. Of course, this is actually more heavy investing style when you have big portions of money which you want to invest and actually trade steady. And if you like this way of trading, so don't forget to subscribe to our channel, press the bell button, because we talk about these kind of stocks all the time. And probably you notice that we always discuss stocks that are in correction. This is the reason for that. It's not just a arbitrary choice, because stocks of big companies that are in correction, they are all going almost like academic alphabetical behavior. You can read it through, clearly visible what is going to happen. So it's easiest way to trade if you know what's going to happen, if you know the major patterns of correction. So that's why we choose it. Very safe, at least to our experience. Very easy to do risk mitigations with non-linear averaging down, works just nice. So if you like this way of trading, as I said, don't forget to subscribe, press the bell button, and good luck with ARCB. This way you will not miss our new videos and new interesting discussions for US-based stocks. So let's stay connected and see you at another episode of Stocks Advisors channel.